Hello, my name is Gus Hayward and I'm a director within Cushman and Wakefield's Tenant Advisory Group here in Tokyo, Japan. I wanted to talk a little today about the office market in Tokyo, chiefly how conditions have evolved over the last 12 months or so, and importantly what opportunities we are seeing in the market for our clients, the occupiers. We in Japan have been quite fortunate in the fallout of COVID-19, with numbers of cases consistently lower than those witnessed in the US and Europe. Japan's government responded with an initial lockdown from March to June 2020. This was then eased over the summer months before a spike in COVID-19 new cases meant that the national state of emergency was reimposed shortly before the new year. This is due to run until March, but the signs are positive and numbers are coming down on a daily basis. We still remain hopeful that we'll see the Olympic Games later this year in Tokyo, but it is unclear whether this will be possible. The Bank of Japan's outlook for real GDP growth rate for 2020 has been revised downward to minus 5.6%. Exports to China, where the economy is expanding again, were strong, and total value of exports in December exceeded the same month last year for the first time in 25 months. I'd like to return to the Tokyo office market and look at how this has been impacted by COVID-19. To set the scene, Tokyo's office rents increased consistently in the 7-year period from 2012 to 2019. Our pre-COVID forecast was for rents to top out in 2019 and for negative rental growth to begin in 2020. We had no idea how right we were with this forecast, although we certainly didn't predict COVID-19. As the global impact of the pandemic has been felt, there's been huge pressure on corporate capital expenditure. This, coupled with Japan's very high construction costs, has meant that there have been very few corporate relocations over the last 12 months. A number of transactions have been cancelled or the requirement revised for a much smaller footprint. Across all sectors, our corporate clients are looking to downsize their Tokyo offices by 30 to 40% on average. Tokyo's office vacancy rates have, as a result, risen to their highest point for 10 years. Minato Ward, where office development is concentrated, rose the most among Tokyo's central 5 wards to 6%. In Shinjuku, the vacancy rate rose to 4.53%, as that submarket tends to be easily affected by the economy due to the heavy concentration of SMEs and sales branches. Shibuya Ward, the rate is still below 3%, but this is expected to rise in the short to medium term as high rates of remote working have been noted due to the concentration of tech companies. The philosophy of remote working in Japan has probably gone through the largest evolution over the past 12 months. For many years, working from home was thought to be impossible in Japan for cultural and socio-economic reasons. The prestige attached to the office location and a corner office, and the fact that Japanese homes were considered too small to accommodate a home office reasonably. This has changed drastically since the COVID-19 outbreak, with a number of high-profile Japanese corporate giants leading the way. In April 2020, Fujitsu announced that it was targeting a 50% reduction to its office portfolio within 3 years. Shortly thereafter, Hitachi also announced that working from home should now be considered the norm. Virtually overnight, therefore, the office market saw a huge reduction in tenant demand, which must drive down rent. It'll be interesting to see how long-term this change in working culture will be, but our view is that Japanese corporate office life has been changed for good. Certainly, after the first national lockdown was lifted, we did not see a rush back to the office, as for example was observed in China. Rents, as expected, have dropped. Average Grade A office asking rent in Q4 2020 was 37,684 yen per tsuba per month, down 1.95% from the previous quarter. The vacancy rate rose 1.13 points to 4.22%, eclipsing the 4% rate of September 2008, shortly after Lehman Brothers bankruptcy. To conclude then, Tokyo remains one of the most vibrant, progressive and largest office markets in the world. There is no doubt that the last 15 months or so have impacted the way people work around the world, and Tokyo is certainly no exception. However, with the correct tenant representation, there are opportunities to exploit, and we would love to discuss these with you more. Thank you again for your time and all the very best for 2021.